Our stock of the day, gentlemen, which is Car Group. It reported a 10% rise in net profit after tax, reaching $275 million for the 2025 financial year, driven by a lift in revenue to $1.18 billion. Also reporting a pro forma EBITDA of $641 million, which is a 56% improvement in EBITDA margin from the previous year. Shareholders will see a final dividend of 41.5 cents per share, 40% franked, representing an 8% increase on the previous year. And not doing too poorly today. I mean, it's not one of those really highly volatile stocks, up by 0.8%. But Luke, I mean, can we put some of the subdued, let's say, share price reaction down to the fact that, I mean, this was a pre-guided result. We kind of knew it was coming.
Yeah, not a lot new here. I think, like you said, pre-guided and a little bit weaker on cash flow and cash conversion than they probably would like. But, you know, guidance to the double-digit revenue growth is pretty much in line with where consensus is. I think that guidance probably assumes a decent pickup in the private sales part of their business, which is currently going backwards at 3% year on year. So I'm not so sure I'd be super confident in that guidance, but I mean, they've got better transparency on you know, where the market's going at the moment for them than obviously I do. So yeah, look, nothing really to write home about here. Continues to be kind of okay value in our view. We don't own it at the moment and probably wouldn't be buying it on the back of the result. But you know, if you're a long-term believer in what the management team's doing here and you think that things are going to get better for Car, then yep, I can see why you want to own it.
So, Henry, the Trader Interactive part of the business, there was a bit of concern around that part of the business. It's the international part, but it seems to have come through all right. Is there any reason to own Car Group right now?
Well, I guess, you know, there was a pretty solid result, Nadine. And at the end of the day, it was pretty much in terms of, you know, it was very much in line with those guidance. I think I was on the investment committee arguing that we should get rid of Car from the portfolio, and you know, I guess this just kind of backs up my view that there was nothing really here to get massively excited about. The Trader Interactive side of things was better than I guess the market was anticipating, so that is a positive. But if the US economy does slow slightly, and with the effects of tariffs, etc., on the car market, then maybe we're going to see a little bit of a tailing off in that business. So I remain cautious. The dividend was good. We got a slight margin contraction in the marine and dealer direct investments, but you know, the result was pretty much as anticipated, pretty much as guided, and the US growth forecast stronger. So you know, they're going to have to keep delivering in the US because that is a big part of their business now. But there's nothing there that's made me change my mind in Car. That's probably better value and better opportunities elsewhere at the moment in Australia.
So that's a sell.
Yeah, I guess it is.
Take profits.
Go
ahead.
I'll give it a sell as well.
Yeah, okay.
I was being nice.
Well,
don't be nice, Luke.
Yeah. There's a time to be nice and a time not to be nice. And apparently, Car Group is on the naughty list for now. But I mean, reality is a lot of people would have made some money out of this one. So you're saying find opportunities elsewhere.